What's up, everyone? How's it going? Welcome to today's market analysis and trade recap video. Today is January 7th. We tried taking 2 days, two trades today, but unfortunately, we got cooked on not one of them, but both of them. So, it's pretty bad day for us overall, but essentially we're getting back into things and we're readjusting to essentially trading overall. We've been in a big break, and honestly, the conditions today were very suboptimal as well because we had these different bookmap targets, both higher and lower. But as you can see, price revolved between them instead of taking one out and then heading to the other, or vice versa. As a result, we were unable to make any. Our confluences and overall hypotheses for today were quite literally invalidated. So yeah, I mean, I have my text here for the two different trades if you guys are wondering for a more specific example of things, but there's that. So let's get straight into it. Alright, so looking at Bookmap, right? Right when market opened, usually don't take any trades, right? We're waiting until that nice 9:40, perhaps even 9:45-ish timing. And we did have ADP NFP today. It's not really that big of a deal. But again, liquidity isn't too significant. I mean, we do have much more clear levels than yesterday, standing out as 7,000 and the 6970 approximately, or 6972.5. We have those as quite significant targets. But in the middle, there's nothing going too crazy. Of course, we have this 6995 area. That does seem to be a decent target alongside this area being a potential target. But right now, it looks like price is going to head and take out that 995 region. And I mean, we do go ahead and take out that 995 region pretty easily. And that seems to be the top for the early session of the day. Mm. So as you can see, we started getting aggressive buying pressure as hinted by this delta that actually got rewarded with the price moving up. But right at 8:45, when we took out that 995 region, what we started to see was that there were very big aggressive sellers preventing price from going higher right after this target got hit. Now, if you look at the book map, we do see that there is supporting liquidity that's greater than this entire region. So we have to see how price reacts there. So let's move forward and see. Because right now we're hovering between these two regions, pretty tight spread of liquidity. We do happen to break past it. So, I mean, at this point, in my eyes at least, it looks pretty clear that we're going to head to 7,000. Why? Well, although we've seen a big seller enter in here, we've rejected off of it. This barrier got introduced. After that barrier got introduced, we started seeing aggressive buying push back up with buyer urgency in the limit orders at 6995 now, supporting price to head higher. But as you can see on the chart, none of that happened. So I mean, potentially I would have tried taking that trade as well and would have failed. See, price does go up here. This at 45 candle. So I mean, we do get to that 6998 region, so pretty close to that liquidity. So if we did take that trade, right? Let's see. Right around when we have that supporting liquidity. So I mean, hold on. Right there. Nah, I feel like it was a bit earlier. Nah, it was after this big buying. Perhaps that 996 could have been an entry, not the greatest of entries, maybe 996 makes sense. Stop loss going to simply be under 992. So right at 992 since it says zero point 0.5. Take profits gonna be at this 2 ticks below. So I mean it's a negative risk to reward, like it's a negative risk to reward trade that we're attempting to take right now. But as we're going higher, we can move stop up to 995 pretty easily. Like such. Now it's a 2.5 risk to reward. And let's see how this plays out. So we do happen to push higher. Okay, well, let's see. Hold on. Yeah, so I mean, if we did take this trade, we likely would have gotten stopped out for 4 ticks. So it would have lost, but 4 ticks is much better than 32. No, 42. It's much better than 42. But then, as you can see, price starts to stumble and tumble towards the downside. And at 905, actually, we enter into the longs. Now, oh, hold on. Now, there's really two reasons for this. It isn't really the best of plays that I could have made. Essentially, what I was seeing was there still is a clear target towards the upside. Are and there's supporting buying pressure right here above the slope. So if this buying pressure can hold, potentially we can head higher. That's what I was looking to see. But what we struggled with is actually waiting to see how price reacts at this area. We're essentially front running a reaction, and that's the mistake that I think we were doing today. Instead of waiting for the reaction, we were front running it. Because at this point in this candle, not this candle, we're thinking, we're not visualizing what will happen correctly, right? Because price is still tumbling towards the downside at that level that we expect it to hold. As a result, would it really be the best idea to enter long there? No, it wouldn't be. I mean, let's read what we said. We dropped down heavily after 9 a.m. Yes. Looking, and yeah, I mean, it's a really good value area to enter. It's right around view op, decent size retracement, good retracement area value wise towards the upside. And it's basically the thing. We said that if we struggle to get seller absorption at the lows, or buyers struggle to hold or absorb, it may go against us. And I mean, it did go against us. Why? Because we didn't wait for these things to occur or not occur. As a result, we got stopped out. Now, pretty soon after, right at 920, we actually reversed that to take a short. Why? I mean, take a look at what's happening, right? It's pretty clear to us now that price may not want to head to that 7,000 region. Why? I mean, because this level did not hold, price is continuing to fall towards the downside. Icebergs are pretty strongly negative. If you look at the trend of CVD, it's going down, and stops are bearish as well. Additionally, we're starting to see lots of selling pressure come in over here, and we're under it. And I mean, I would have just liked to take shorts to capture upon until this liquidity grabs some micro movement, using this as our protecting level. And we entered at 920. Why? We are betting that because we're so close to lower liquidity and that there are supporting barriers, price will simply touch the upper barrier and take out lower liquidity. We enter, yeah. So I mean, in this trade, we actually entered pretty bad entry, But then as we saw price heading against us, we saw the barrier becoming more significant. Once again, we're front running that barrier. This barrier right here. So our first entry, first con was right there. Second con, we made it at 6983.5 because that's a pretty good entry, right? Our stop loss at that point would only be that's hold on. Our stop loss at that point would only be 6 ticks, right? Which is nothing crazy at all, but it's our earlier entry that caused our stop to be pretty big. Now, that's a decent entry, but then again, we didn't actually gauge a reaction of that barrier. We were front running it. And again, that's a key mistake that we made. I mean, it's going towards us, but we didn't really tap into that barrier. Now, moving forward, look what happens. Buying just breaks through that barrier, invalidating our trade completely, and as in turn, stopping us out. And yeah, I mean, those are our two trades that we've taken. We know what we did wrong. It's the main thing is simply front running. We were front running instead of reacting, right? We were making assumptions that some type of reaction was going to occur that would validate our trade before it actually occurred. And that was a mistake that we made. Instead, what we may want to do, or what we should have done, is waited for that reaction at that barrier or key level that we're looking for. And if certain conditions were met at that level, then potential entry could and should have been taken. And in this case, if we've done so, we would have avoided taking both of those trades, potentially even taken some other trades instead. Now, again, I mean, we're just getting back into the groove of things, but we're looking to fix our adjustment mistakes so that we're ready to go for the next week. So with that said, I mean, let's just see if there's anything in the next week. See, right now liquidity seems really, really bare. Yeah, very bare liquidity. I mean, right now we're starting to come up, but then we get to that region again, and that region holds heavy selling significance. And by that point, our session is over. So, I mean, today might have just been one of those days with some weird action that would have just simply not worked with our strategy. Even if we did the completely right thing, as we saw with the initial trade, perhaps we could have still gotten stopped out for a small loss. But because of front running instead of reacting, we resulted in two losses that were unfavorable. And we hope not to do this again. So, with that being said, that's basically all I have here for today. If you have any questions, feel free to leave a comment down below or just join the completely free Discord server, which is linked in the description down below. Additionally, if you want to check out the order flow tools and platforms that I use, those will be linked in the description as well. There's a lot of free functionality in anything I can do, so you could probably get started with seeing if order flow works with your strategy literally right away for free. But as always, do your own research, and I wish you the best of luck. With that being said, I guess I'll see you guys tomorrow. Goodbye.